All right, so thinking about buying a home, huh? Exciting stuff. But let's be real, finding the right mortgage lender, it can feel like a total maze out there.
Oh, yeah, it can be overwhelming for sure, especially with so many options and all the jargon they throw around.
Right. That's why we're here. This deep dive, we've got some amazing insights from 7 YouTube videos all about mortgages.
We've got mortgage pros, real estate agents, the whole 9 yards.
Exactly. So think of it like having a whole team of advisors right in your pocket, ready to guide you to the perfect lender for your situation.
And that's really the goal here, right? To make sure you're not just signing on the dotted line, but that you really understand what you're getting into.
Totally. We want you to find a lender who's truly in your corner, someone you can trust to help you navigate this whole process.
Because choosing the right mortgage lender can make a world of difference.
Okay, so before we even get into picking a lender, let's take a quick step back.
Yeah, good idea.
What are the different types of mortgages out there? Everyone knows about the standard 30-year fixed rate, but maybe we should break down some of the others.
Definitely. We've got things like conventional loans, which are probably the most common,
Mm-hmm.
but they usually require a decent credit score.
And a pretty hefty down payment, right?
Yeah, often around 20%, which can be a barrier for a lot of folks.
Then there are FHA loans, which are backed by the government. Those can be great for first-time homebuyer.
Or for people with maybe a lower credit score.
Yeah, because the down payment can be as low as 3.5%. That's a huge difference.
It is, but there is a trade-off.
What's that?
You'll usually have to pay mortgage insurance with an FHA loan, which can add to your monthly payment.
Okay, important to factor that in. Now, what about VA loans? I know those are specifically for veterans.
Right, VA loans are fantastic for eligible veterans and their families.
What makes them so great?
Well, they're backed by the Department of Veterans Affairs.
Okay.
And the big benefit is they often have zero down payment options. And you don't have to pay mortgage insurance.
Wow, that's a big perk.
It is. It makes homeownership so much more accessible for those who have served our country.
And there's one more type we should mention, right? USDA loans.
Yes. These are designed for rural and suburban homebuyers.
Interesting. You wouldn't think a place like Ventura County would have areas that qualify for USDA loans, but apparently some parts do.
It just goes to show you never know until you look into it. There might be more options available to you than you realize.
Okay, so let's say you've got a sense of what loan type might be right for you. How do you actually go about choosing a lender? Where do you even start?
Yeah, that's the big question. And you really want to be thorough when vetting potential lenders. Don't just go with the first one you find or one that a friend casually mentions.
Right, one of the experts actually cautioned against blindly taking your real estate agent's referral. Referrals can be great starting points, but you still need to do your own research.
It's crucial to have a conversation with any potential lender.
Yeah, get a feel for them.
Ask some questions, really get a sense of their experience and how they operate.
Okay, give us the inside scoop. What kind of questions should we be asking?
First off, how long have they been in business?
Makes sense.
And how many loans do they typically handle in a year?
To get a sense of their volume.
Exactly. That gives you an idea of their experience and capacity.
And don't be shy about fact-checking them. One expert even suggested checking a resource called the Scotsman Guide, which ranks loan officers by volume.
Ooh, that's smart.
Another question to ask is if they can send you some preliminary numbers.
It's like a basic loan summary.
Yeah. If they're hesitant or make it difficult to get those up front, red flag.
For sure, it could mean they're trying to lock you in before you've even had a chance to compare offers from other lenders.
Speaking of red flags, one expert mentioned that a lender pushing you to apply online before having a conversation is a big no-no.
Yeah, they might be trying to rush you through the process.
And while we're on the topic of things to watch out for, be wary of lenders who only focus on getting you the lowest interest rate.
Oh, yeah, that's a good one.
Because isn't a low rate the whole point?
Well, yes and no.
How so?
A low rate is fantastic, don't get me wrong.
Yeah.
But it's not the only thing that matters.
What else should we be looking at?
You need to consider the bigger picture, which includes fees and loan terms.
Okay, right.
Those can have a big impact on the overall cost of your loan.
So don't be blinded by a shiny low rate. Make sure you understand the whole package.
Exactly. Some lenders, they bury fees in the fine print.
Sneaky.
One expert specifically mentioned Navy Federal Credit Union.
Okay.
They have a 1% origination fee tucked away in their terms and conditions.
Wow. On a $500,000 loan, that's $5,000.
Exactly. And it's not just Navy Federal. Lots of lenders have these hidden fees, so read everything carefully.
Ask questions.
Absolutely.
You mentioned loan terms, too. What are some of the things we should be thinking about there?
Well, there's the length of the loan, whether it's a 15-year or a 30-year,
Right.
and whether it's a fixed or adjustable rate. All these factors can influence your monthly payment and long-term costs.
So how would you recommend someone go about comparing those different terms? What are the key things to look at?
It really depends on your individual financial goals and circumstances, right? Some people, they really want to prioritize having lower monthly payments.
Sure, makes sense.
Others, they want to pay off their mortgage as quickly as possible.
So it's all about figuring out what works best for you.
Exactly. And then there's fixed versus adjustable rates. With a fixed rate, your interest stays the same for the entire life of the loan, which could be very appealing for some people.
We see stability.
Exactly. But adjustable rate mortgages, or ARMs, can start with a lower rate.
The catch is that the rate can adjust.
Right, after a set period, usually a few years.
So an ARM could be a bit of a gamble if interest rates go up.
It definitely carries more risk.
Okay, so it's about understanding your own risk tolerance.
And having a lender who can really walk you through those different options and help you weigh the pros and cons.
So along with loan terms, what else should we be asking these potential lenders?
Don't forget about turnaround time. How long does it typically take them to do a pre-approval? And how long to close a loan?
Especially if you're in a competitive market.
Oh, yeah, that's crucial. One expert said that 90% of their business comes from their speed and professionalism.
Wow.
Because delays can cost you money, especially if interest rates are rising.
But isn't there a danger in rushing things too much, making a hasty decision?
Definitely. It's about striking a balance.
Yeah, finding that sweet spot.
You want a lender who's efficient? Sure, but also thorough and takes the time to answer your questions.
So how can you tell if a lender is going to be both fast and thorough?
One good indicator is whether they have a dedicated team to handle your loan.
Okay.
If they've got people specifically assigned to processing paperwork and keeping things moving, that can really streamline the process.
So a team approach is a good sign.
Absolutely. It means there's more accountability and less chance of things falling through the cracks.
Okay, we've covered a lot about choosing a lender, but before we move on, one more question. One of our experts mentioned something called discount points. Can you explain what those are and why they matter?
Sure. So discount points are basically prepaid interest.
Interesting.
By paying them up front, you can actually buy down your interest rate.
So it's like a trade-off between paying more now and having lower monthly payments later?
Exactly. Whether or not it makes sense to pay discount points depends on your financial situation and how long you plan to stay in the home.
This is definitely getting into the nuances of mortgages, but hey, that's why we're doing a deep dive. We've covered a lot of ground in this first part, but there's still more to unpack.
Stay tuned for the next part, where we'll delve deeper into the application process.
We'll uncover some expert tips for making it as smooth as possible, so stick with us. Welcome back. Ready to dive even deeper into this mortgage lender world.
Oh yeah, we're going beyond the basics now, getting into some of the nitty-gritty but super important stuff.
One thing that really stood out from all our research was just how crucial good communication is.
Oh, absolutely. You're going to be working with this lender for potentially months, so you got to make sure you're on the same wavelength.
It's like any relationship, right? Communication is key.
Exactly. And you want a lender who's not afraid to be proactive, you know?
Keeping you in the loop.
Yeah. Like a really good lender will anticipate problems before they even pop up.
And keep you informed every step of the way.
It's almost like having a partner, not just someone pushing papers. You know what I mean?
Totally. Someone who's invested in you actually becoming a homeowner, not just closing the deal.
Exactly. And buying a house can be stressful, so you want someone who gets that and is patient.
Okay, that makes sense. Another thing that kept coming up was the importance of understanding all the costs involved, not just the interest rate.
Oh, for sure. You got to be crystal clear on things like origination fees, discount points, closing costs, all that jazz.
So how do you go about making sure you're not getting hit with any surprises?
Don't be afraid to ask for a breakdown of every single fee. A good lender should be happy to explain everything.
Transparency is key.
If they get all cagey or evasive, that's a big red flag.
Okay, good to know. And what about getting them to think outside the box a little? Like really consider your specific needs and goals.
One of the experts had a great tip. Ask them, what would you recommend?
Oh, I like that.
It kind of forces them to go beyond just the basic options and actually think about your situation.
Shows you're looking for someone who's proactive, willing to go the extra mile.
Exactly. Now let's talk speed. A bunch of the experts mentioned that working with a lender who's efficient and can close loans quickly.
Yeah, that's a big deal, especially in competitive markets.
Oh, huge. Time is of the essence, especially if you're trying to snag a property that everyone's after.
So it's not just about getting a good rate, but locking it in fast before it potentially goes up.
Right. And that speed isn't just for pre-approval either. You want them to be able to close the loan quickly once your offer is accepted.
Because delays can be a nightmare.
Oh, they can totally derail a deal.
So what kind of questions can you ask to gauge a lender's efficiency?
One of the videos suggested asking about their average turnaround time for pre-approval and closing,
Okay.
and also whether they have a team in place to help expedite the process.
Because having a dedicated team usually means things move faster.
For sure. Like you've got multiple people working on your behalf to keep things running smoothly.
Okay, now let's talk about something everyone loves. Credit scores.
Ah, yes, the all-powerful credit score. It can feel a little mysterious, but it definitely plays a big role.
Because it basically tells lenders how likely you are to repay the loan, right?
Yep. Higher score usually means better interest rates and a smoother approval process.
So it's worth taking the time to understand your score and maybe work on improving it if needed.
Absolutely. And there are tons of resources out there to help you check your report and boost your score.
Okay, so let's say you've checked your score and it's not quite where you want it to be. What are some things you can actually do to improve it?
One of the experts said to focus on paying down credit card debt
Makes sense.
and also to make sure you check your report for any errors and dispute them right away.
Because even small mistakes can make a difference.
Oh, totally. And another thing people don't always realize, closing credit card accounts can actually hurt your score.
Even if they're paid off.
Yep. It's better to keep them open, even if you're not using them actively.
Okay, good to know. Along with credit score, I know lenders also look at something called your debt-to-income ratio.
Oh yeah, DTI.
I gotta admit, I'm a little fuzzy on what that actually means. Can you break it down for us?
Sure. It basically measures how much of your monthly income is going towards debt payments, like credit cards, car loans, student loans, all that.
And lenders use that to figure out if you can handle a mortgage payment on top of everything else.
Exactly. So generally, the lower your DTI, the better.
Because it shows you've got more wiggle room in your budget.
Right. One expert mentioned that most FHA loans will allow a DTI of up to 57%. But if your credit score is on the lower side, that maximum might drop to 45%.
That's a pretty big difference.
It is. It just shows how those two factors, credit score and DPI, really work together.
So it's worth focusing on both.
For sure. Now, what other advice did the experts have for getting the best possible mortgage deal?
Hit us with it.
Shop around. Don't just settle for the first lender you talk to.
Get multiple quotes.
Yeah, at least 3 to 5 from different lenders.
Because you'd be surprised how much rates and terms can vary.
Oh, big time. By shopping around, you're way more likely to find the best deal for you.
One of the experts even said they've seen lenders magically lower their rates when you show them a competing offer.
It happens all the time. Don't be afraid to negotiate.
Flex that consumer power.
Exactly. And don't overlook their reputation and customer service. Online reviews and referrals can be really helpful here.
So what should you be looking for in those reviews? What are the signs of a lender who's really going to take care of you?
Look for lenders who people consistently praise for their responsiveness, transparency, and their willingness to go above and beyond.
Yeah, because choosing a lender is a big deal. You want to feel good about who you're working with.
Absolutely. You
Right.
want someone you trust, someone who's got your back.
Okay, I think we've covered a ton in this part of our deep dive, but believe it or not, we still have more expert insights to share. Stay tuned for the final part where we'll wrap things up with some key takeaways and a question to get you thinking. Okay, we're back, ready for the final installment of our mortgage lender deep dive.
Yep. We've covered a ton of ground so far.
But we're not quite done yet.
Nope. We've got a few more gems from our expert sources.
To help you really nail down that perfect lender,
And by the end of this, you should be feeling like a total mortgage pro.
okay, bring on the wisdom.
One thing that kept coming up was the importance of understanding mortgage insurance.
Yeah, we touched on it a bit earlier.
But it's worth a deeper look, for sure. It could be a significant expense.
So we should know when it's required and what our options are.
Exactly. There are two main types. PMI, private mortgage insurance, and MIP, mortgage insurance premium.
Okay, break it down for us. What's the difference?
So PMI is usually required on conventional loans when you put down less than 20%.
Ah, so if you can't swing a big down payment, you're probably looking at PMI.
Yep. And it can add a noticeable chunk of change to your monthly payment.
Is there any way to get rid of it?
The good news is once you build up enough equity in your home, usually around 20%, you can typically cancel it.
Okay, that's not too bad. What about MIP? When do you have to deal with that?
MIP comes with government-backed loans, like FHA loans.
So if you go with an FHA loan, which often lets you put less money down, you're likely paying MIP.
Exactly. And here's the thing about MIP. Unlike PMI, you can't always cancel it.
Even if you have enough equity.
Yeah, some FHA loans require you to pay MIP for the life of the loan.
Wow, that's a huge difference. Really makes you think carefully about those different loan options.
For sure. Another piece of advice we heard a lot was to be cautious with adjustable rate mortgages, those ARMs.
Right, because they start with lower interest rates, which can be tempting.
Exactly. But that rate can change after a certain amount of time, usually a few years.
So your payments could go up significantly if interest rates climb.
That's the risk you take with an ARM.
So it's a gamble.
Kinda. They can be a good fit for some borrowers, especially if they plan to sell or refinance before the rate adjusts.
But if you want that stability, knowing exactly what your payment will be every month, a fixed rate mortgage might be a better bet.
It all comes down to your own financial goals and risk tolerance.
Yeah, for sure. One expert mentioned that with interest rates going up lately, a lot of people are thinking about ARMs to try and save money in the short term.
Right. It's a trend to watch, but you got to be aware of those potential downsides.
Totally. Now, one last thing that really stuck with me from all this research was the importance of not just choosing a lender, but building a relationship with them.
Oh, that's huge. Finding a lender you trust and feel comfortable with can make all the difference.
This is a big financial decision. You want someone who's in your corner.
Someone who's more than just a transaction.
Someone who'll be patient and answer all your questions, even the ones that seem basic.
Absolutely. And if you ever feel like a lender is rushing you or pressuring you, walk away.
Yeah, you have the right to choose who you work with.
Exactly. Finding the right lender can make this whole home buying process so much smoother.
Well, I think we've officially covered everything. Hopefully you're feeling way more informed and confident about picking the perfect mortgage lender.
Yeah, go forth and conquer that mortgage world.
And as you compare those lenders, just remember that the best choice for you might not be the one with the lowest rate or the fastest closing time.
Right.
It's about finding that lender who communicates well, understands your needs, and really acts like a partner.
Someone who'll be there for you every step of the way.
And on that note, we'll wrap things up. Happy house hunting, everyone.